Good morning or good afternoon, everyone, depending on where you are, and welcome to the Latinx Venture Capitalists and Entrepreneurs, the State of the Playing Field. Thank you all so much for joining us today for this exciting event. I'm Monique Winkler, the Regional Director of the SEC's San Francisco Regional Office, which is co-sponsoring this event, along with the SEC's Office of the Advocate for Small Business Capital Formation, also known as OASB, in celebration of Hispanic Heritage Month. OASB was established in 2019 to advance the interests of small businesses and their investors at the SEC and in the capital markets. One of the areas of focus for the OASB is women and minority entrepreneurs, from whom we will learn today. Before I introduce our moderator for the event, I want to recognize and thank my colleague in San Francisco, Carlos Vasquez, who is the driving force behind the event. Without him, we would not be here today with such a great group of panelists. I also want to thank Cheryl Lawson and Susan Lee, both of SFRO, who assisted Carlos, and Julie Davis from OASB. And now I will turn it over to Sebastian Gomez, who leads OASB, which he joined in August 2020 after serving as lead advisor on capital formation matters to the chairman of the SEC. Sebastian has held many other leadership roles at the SEC since 2007, including leading the Division of Corporation Finance's Office of Small Business Policy, which is responsible for drafting many of the rules governing exempt markets. Sebastian, the floor is yours.
Thank you, Monique. Good afternoon, buenas tardes, good morning, buenos dias for those in the East Coast. I'm Sebastian Gomez, as Monique said, and the Deputy Director in the SEC's Office of the Advocate for Small Business Capital Formation. And I'm super excited to moderate today's discussion. As Monique says, it takes a village to put an event like this together. And I want to extend, again, my thanks to Carlos Vasquez. His work putting together this panel has been superb, and without him, we would not be able to hear from today's fantastic speakers. As some of you know, the SEC has a three-part mission: to protect investors, maintain fair and orderly markets, and to facilitate capital formation. I am honored to be joined today by both Latinas and Latino investors and entrepreneurs to focus on how we can increase capital going to entrepreneurs who have been and continue to be underfunded in the Latino community. Before I turn to my fantastic panelists, let me put into context how much work needs to be done in this space and why we're focusing both on the investors and the entrepreneurs at the same time. Studies have shown that minority-owned funds active in the United States are more likely to fund minority entrepreneurs. Depending on the metrics used, minority funds are about 3 to 4 times more likely to fund those minority entrepreneurs. But the representation of minority funds is very modest. Black and Hispanic-owned funds represent a tiny little slice among all of the other private capital funds. And minorities find it even more difficult to enter the market by raising their first fund. And when they start their first fund, they're less likely to meet their fundraising goals. So what this means is that not only we're seeing that the number of minority funds is small, but when we consider the assets under management that they have, those minority funds have even a smaller piece of the pie compared to funds that are not led by minority funders. Keep in mind where I started. This is a significant issue and troublesome because it is this minority-owned funds that are active in the United States that are more likely to fund the minority entrepreneurs. So if we want more capital going to minority entrepreneurs, it is very important to keep in mind who is providing the capital to them. I hope today's conversation is part of a wider discussion on how to change this disparity. And I won't take more of your time. I want to go ahead and get started with our panelists. So I'm going to ask each of them to tell us about their work and briefly how they got where they are today. And Felipe, if you don't mind, Felipe is from the San Francisco Bay Area and is the CEO and co-founder of KiwiBot. And Felipe, can you tell us a little bit about KiwiBot and yourself?
Of course. Thank you, Sebastian, for the invitation. I'm the co-founder and CEO of KiwiBot. We build robots for food delivery. Right now, we have deployed more than 500 robots across 20 cities and 24 universities in the US. We started the company out of the UC Berkeley campus. The University of California was our first institutional investor. And yeah, very excited to sharing the panel and discussion with other fellow Latin entrepreneurs and VCs and important actors in the space.
Thank you, Felipe. I'm going to invite Carlos to turn on his camera and introduce himself. Carlos Covarrubia is an associate at Hyde Park Ventures, an investment fund focused on early stage and mid-continent tech startups based in Chicago. Carlos?
Hey, good to be here, and thank you for the introduction. My story is a little bit different, but I'll give you the short version of how I got here. I was born in Mexico, kind of had the same, but raised in rural Illinois, so kind of had the same first gen background that a lot of us have. And the two stories I always tell when saying that sentence is, you grow up translating for your parents when you're a kid, and then at the end of the day, I affectionately call myself a walking 401k because that's the truth, but that's the responsibility we were given. But I grew up in rural America, like I said, got a chance to go to Notre Dame for undergrad, pieced together a full ride there, and then graduated, and eventually got to a point where I was working in real estate, but helped launch an angel group dedicated to investing in Hispanic and Latinx founders, which is called Angeles Investors, and that let me get some experience in venture. And we co-invested with Hyde Park, and that's how I got to know the team a little bit, and then later joined the team.
Thank you so much, Carlos. Welcome. Next, I'm going to turn to Maria Salamanca. If you don't mind turning on your camera and introduce yourself. Maria is a partner at Ulu Ventures, a Palo Alto-based firm that focuses on seed stage investing.
Yes, it's great to be here. Thank you, Sebastian. I am a Colombiana, so I was born in Bogota when I was came to the US when I was 7, moved to Florida, which is kind of where I grew up with my family, and most of them still are there. I headed off to the West Coast for college, so for Berkeley, kind of similar to the folks mentioned here. I think my parents were always very clear that my one job was to be a student and to do a decent job at it. So I went to Berkeley and kind of landed in the land of venture and tech without knowing what I was doing at the time. And very shortly after graduating, I was working at a lobbying group, Forward.us, focused on immigration reform. That was started by Zuckerberg and Bill Gates and Ron Conway, a bunch of the tech CEOs and VCs. I spent about a year there, and at one of the events was when I met 2 of the founding partners of a fund that was just getting started. They were calling it Unshackled Ventures. The fund's focus was immigrant entrepreneurs. So the idea was to be the first check-in in companies that have at least one foreign-born founder with, kind of a lot of, you can do good and do well financially as well, because a lot of them over-index in very successful entrepreneurship journeys. So was there at that fund for 7 years investing, and I actually very recently moved over to Ulu Ventures, which is seed stage fund. It's the biggest venture capital fund led by a Latina. Her name is Miriam. She's the founding partner, Miriam Rivera. And we're now officially the only venture fund that has the first institutional venture fund, so over $100 million under management, with more than 2 Latinas on the team. So very proud of that. We care deeply about diversity and how we invest and how we think about portfolio. And yeah, so we are today.
Thank you, Maria. It's great for you to join us today. And now I'm going to invite Lou Sandoval. who is the president and managing partner of Halo Advisory Group, a business advisory firm collaborating with clients from startups to Fortune 100 companies, who has also been a tech executive and a board member and an author, and is based in Chicago. Lou?
Sebastian, thank you for having me here. And it's an honor to be here with everybody. And similar to everybody's story, I'm first generation to graduate from college. And in doing that, kind of started my first part of my career out in corporate America, learning the different ropes through various career ventures. Had a successful exit in the company that I was an early employee in that was acquired by a very large healthcare conglomerate. And it allowed me to kind of pursue what I wanted to do and acquire companies that in a field that I had a passion for. To date, I have started 5 successful businesses. I have taken 3 to acquisition. In my latest venture here with Halo Advisory, I have I work with seed to growth stage companies, anywhere between 2 million to 25 million in ARR, to help them scale. And I think I have a specific passion in my heart to help Latino and Latina led companies or companies from underserved areas, because I feel that often they don't get the early help that they need to kind of get up to scale and set their companies up the right way. In many of the companies that I founded, I bootstrapped a few of them, and in later phases did equity raises. To date, I've raised about 80 million over my career in equity capital. The last jump was raised a year ago, 2021. I raised 2 million in a priced seed round, which closed, was fully subscribed, and thankfully came from a majority of diverse VCs. So.
Thank you, Lou. It's fantastic to have such broad expertise in the panel, and I can't wait to get started. I want to remind the audience that if you have any questions for our panelists, to just type them in the Q&A section. We'll be collecting those questions, and at the end, as we have time, we will be happy to try to ask the panelists some of those questions. But to get us started, I wanted to share some statistics that were compiled by LatinxVC.com. It's a non-for-profit funded by Maria that focuses on increasing the number of Latina and Latino VC investment professionals. And I think this is very helpful to put into context why we are talking about the topic that we have today. So the Latino population comprises about 19% of the total US population. But when you look at Latino and Latina investment professionals, they're only comprised about 2% of the total venture investment professionals and 2% of the partner level venture capital investment professionals. These are the individuals who are going to be making the decisions as to where the funds are going to be invested. Most institutional venture capital firms have done very little to improve the statistics, as 86% of institutional VCs have 0 Latinx investment professionals, and only 2% of institutional VC firms have 2 or more Latinx investment professionals. Remember what I mentioned at the beginning. This is very important, because research has shown that founders are 21% more likely to be funded by an investor of the same ethnicity than that of a different one. So more diversity on those who are allocating the capital means more diversity for those minority entrepreneurs. So Maria, if I can start with you, and then I'll turn over to Carlos. Why do you think these numbers are so low, and what can we do to increase them?
Yeah. I think venture capital as an asset class is actually not a very, it's fairly small compared, right, to when you look at buyout, private equity, investment banking. When you are in college and you're interested in finance, venture capital is not the most common asset class you learn about. It's been historically a somewhat kind of boutique-like asset class. Most of the big funds got started in the 70s, so it's also fairly immature when you think about it compared to some of the other asset classes. And so I think even just being on the consciousness of students of our community studying finance as a possibility is one. The second thing is that it shares a lot of the similarities with other kind of, small boutique assets, which is the networking is really important. Hiring is not very sophisticated or transparent. So it tends to be a lot of the hiring of VC funds happens through networks or through postings that are private, not like, publics, like, Goldman and Morgan Stanley have to post their analyst class application, right? That doesn't happen in venture. It's very recently been moved. And so what you've seen in the past couple of years, starting in probably 2019, was the Me Too movement started a nonprofit organization called All Race, and the whole focus was on let's push venture to be more inclusive of women as well, because they are also single digit of the investors. Then Black Lives Matter happened, and there was an organization called Black VC, and their idea was, their numbers are also atrocious in venture capital, and it kind of matters in thinking about the Black community having access to capital. And then Latinx VC was founded shortly after that. And I think we have very unique challenges as well when you think about how do you change it and increase the numbers. We all look very different. Even our last names sometimes don't really give us away. We're technically very different in race and culture and religion. So unlike going on a website for most of these venture capital firms and finding the female or the Black investor, usually a little bit easier than it is to find the Latino investor. So the number one kind of barrier we had as an organization, Latinx VC, was even just like, how do we find them? Like, where are they? That's kind of why we started the report, because we really wanted to do a lot of the data work. And we're actually going to be dropping our second report by the end of this month for Hispanic Heritage Month. So stay tuned to that. But we're the only organization that's kind of tracking investors that are Latinx in venture capital. And then the other thing was we started a fellowship program. So anyone who has 3 to 5 years of work experience, we have a program that runs twice a year to break into venture, where we kind of go to what is venture as an asset class, what is the day-to-day, what's the difference between early stage, late stage, different verticals and industries, kind of demystify the entire industry for them. And that program has been very successful in placing folks into venture capital roles. So we're doing what we can, but yeah, we're a 2-year-old nonprofit and still growing. So very excited for the work we're doing.
Maria, I commend you for all that work, and thank you. Carlos, I think one of the fantastic things about this event is that we know there's a problem, but at the same time, we know that there's success stories, and you are one of those examples of success stories. So share with us your thought on this, and what more can we do to increase more people like you?
I appreciate calling me a success story, but I don't think of that quite yet. But I think I'm a good example of what Maria was talking about in terms of education, awareness, access. What's a little bit different about me is, so the first time I heard about venture capital was in high school, when they had us take a career exam of like, what are you going to be when you grow up? And I didn't like the first answer or whatever I got. So I went back and I like changed the questions a little bit. And I was like, you're going to be a venture capitalist. And I told everybody that's what I was going to do starting from high school, but being totally ignorant of what that actually was, what that actually meant. So then fast forward 4 years in college, Notre Dame didn't have a lot of access to the industry, but it had a little bit, enough to let me shadow somebody in venture my senior year who was extremely successful, ex-partner at Sequoia, USVP and stuff. But my point is, like, those were the two, kind of exceptions in my book. The rest of the story is really me like networking and getting a lot of help from some of the other folks that I had either met through by chance or by searching. So like Rami was a big help in my career as far as like trying to get full-time into venture, and so was other folks like Af Hernandez and different folks in the industry, which Latinx VC and a bunch of these networks like did help. So my point at the end there is really like, maybe I was a little bit different on the awareness side, but having that network, it really does build up the confidence. It gives you the insights of what you need in order to approach interviews or recruiting in a more successful fashion.
Both Maria, Carlos, both of you mentioned networks, and I'm going to turn to Lou and Felipe on a question on that. We often hear, we do a lot of outreach event, and we often hear about people talking about network gaps. And what they tell us is that if you didn't grow up around a lot of rich people, or you didn't go to a school where there were a lot of other rich people, then you don't have a Rolodex of contacts that are wealthy and are able to help you get started. And that's a theme that we hear quite often at a lot of events, and comes primarily from minority entrepreneurs who are trying to bridge that network gap. So Lou, I want to turn it over to you and ask you, what would you say to a founder on how to overcome this network gap?
Well, as we can see on the screen, there's actually help on the way. I think Maria and Carlos are examples of the change that's coming. It's because we truly have had up until now a real pipeline issue. And I think there's a lot of things that are changing right now in the infrastructure to create a pipeline of individuals that have an interest in getting into startups, that have an interest in getting into venture capital. But I equate it really, the advice that I'd have is I draw a parallel to career management strategies. In a career, when you're developing your career, wherever you're working at, if you're in a field where there's very few that look like you, you're going to find mentors or sponsors that look unlike you, and you're going to develop relationships with those individuals. Okay, so that's just part of a good, just straight up strategy. So as an entrepreneur, as a founder, I think it's incumbent upon you to develop those relationships with other VCs that may not look or come from your background as well. But that aspect of it is changing, and I think a lot of it comes from the research that you do on your VCs when you're getting ready for your raise, when you're looking at their thesis, when you're looking at the types of investments that they make, when you're looking at who makes up their team. A lot of times I've seen the people on the analyst side are younger individuals of color, on some, and the people, the decision makers, are still some of the traditional, we'll call it the old guard. So you ultimately have to be able to connect with multiple people. And there's one very, very large global firm, VC firm that I think is classic for this. I know I pitched them when I was raising the last 2 million I did, and it was interesting to see that they had this diversity fund that they were operating out of. The individuals that were doing all the due diligence in that fund had a fair amount of latitude to kind of learn about the companies and everything, but the ultimate decision makers were still people at that were inside the main structure. So I think it's incumbent upon those founders to build those relationships, and so that you're able to transcend and work beyond whatever blocks might be in the way.
Great advice. And Felipe, I love that when talking about your business, there's cool stuff. I mean, robotics, things that you expect to see in the future. But I take you back to that question about networking and finding your investors. Can you tell us a little bit about your experience finding that network and the advice you can give other entrepreneurs?
Yes, of course. So I arrived to Berkeley in 2017, and I do think that actually our first angel investor was someone from Venezuela. Yes, and I do think that you can find a lot of support in the Latino community, and even in my. Yeah, we are in the process of closing a new financing round, and the lead investor was introduced to me in a Latino dinner that I met someone from another fund, and then I explained the business, but he couldn't invest, and then because I guess that maybe because of the Latino support, he introduced me to another partner in another VC fund, and now they are leading our new financing round. And that's why what I encourage to the people is every time that there is an event, even if it's a dinner, or even like, for example, this panel, I treat it as a priority, because not just to get benefit, but also to find ways to help other fellow founders. Another I don't know, kind of advice or something that have worked for me is that sometimes you as a founder, you get very focused on reaching out to investors, and a lot of the investors that I have that I have bring to work with me, I got them introduced by other fellow founders. Yes, so sometimes it's easier to reach out to a founder than to another investor, and those will be my 2 cents.
It's a great advice. Tap that network of fellow founders like yourself and get advice, suggestions from them. Maria, you mentioned that you just moved to Ulu Ventures, and you mentioned the work you had done before that. And as a fellow immigrant coming into the United States, I remember the challenges of not just getting used to the culture, but also learning a new language. And those are just added challenges for someone looking to raise capital who is a recent immigrant to the country. What has been your experience in thoughts for someone who is relatively new to the country on how they can get the funding they need for their business?
Yeah, I mean, a good portion of immigrants definitely start more of kind of small and medium-sized businesses, right? These are typically not venture capital fits. And like the biggest difference, right, I think there's a lot of education to be done there, right, is if you're a software internet play first, where, you're trying to optimize, one engineer builds you your first, $5 million, right? Versus if you're a little bit more brick and mortar or e-commerce, where the margins are a little bit, under probably 50% of profit, you tend to do a little bit different of funding. In this case, SMB or medium size, right? You go to banks, traditional ways to have loans. And so there's that kind of difference, right? When you look at venture capital and where they're finding diverse talent for investing or for entrepreneurship, or in the case of immigrants, a lot of it is happening in the university system. So when you go to a Berkeley, when you go to a Notre Dame or a Berkeley, that's kind of where you get exposed to entrepreneurship, to venture, to finance. And that's actually kind of the folks that are seeking those professions, as well as company building. And a lot of these university ecosystems tend to have some decent education on what that looks like to start your own company, to start your own fund, or to join venture. So that tends to be a very big concentration of where folks are. And I think, from the government's perspective, like focusing on what at Shackle, when we were focusing on international students, we would figure out what are the universities that over-index in international students that have either business or engineering degrees, and how can we be there to answer any questions they might have about starting companies. I think, at Ulu, we're kind of doing the same, which is where are the most like diverse technical or business savvy talent in undergraduate and graduate, and how do we get to them so that when they start companies or when they're thinking about joining careers, that, hopefully we're the first call for them as well. So I think there is definitely that concentration of network and knowledge, and being close to big cities, San Francisco, New York, helps. Being in some of those university concentrated campuses also helps. I think the hardest thing always for our community is just getting plugged into those communities and trusting that these communities are there for helping you, not to kind of sell you BS, if that makes sense.
No, certainly. And you mentioned San Francisco and New York, and the reality is that data shows that a lot of the capital is actually concentrated in the United States, and it's concentrated in the two coasts. It's concentrated in Silicon Valley, it's concentrated in Boston, New York. Carlos, you're not in any of those cities. You're actually in the middle of the country. Can you tell us a little bit more about the extra challenges of raising capital where you're not in what is traditionally one of those big sources of capital?
Yeah, so for to say it explicitly, so my fund and the fund I work at invest in the mid-continent, which is anywhere from Pittsburgh to Omaha, north of St. Louis, and then we also invest in Atlanta and Toronto. But as a fund and investors, we see it as more of an opportunity than a challenge, because that's our thesis, and we're able to see, I think the number is around like 90% of all of the companies who fundraise within our geography and stage and criteria. On the founder side, it definitely is. There are different aspects of it that can be more challenging when fundraising, and I think a lot of people refer to, when you're even in Chicago, you refer to coastal money as money that has less barriers to get to, if you will, and obviously there are also like the network issue of it's going to take you a few different degrees to get to either an investor or the right person to even get in front of whether it's an angel or somebody in venture. But I mean, again, on the investor side, we're raising fund for right now, and I think we provided evidence that this is a good area to invest. In my head, how I answer like the challenge question is, in the coast, there's a different dynamic of supply and demand when it comes to capital, and I think because of that, you are more likely to invest on like early stage stuff or finish and raise a round because of that. Than you are in the mid-continent, if you will. But it all kind of fits the same thesis that we as Latinos have, right? It's a network issue, it's a capital issue, and there are definitely ways to get around that, which I'll leave it off as we're all working towards the solutions.
Thank you, Carlos. Lou, I'm going to follow up on that because you're in Chicago as well. The 2020 census shows that the Hispanic population in Chicago is soon going to become the largest minority group in that area. And I was curious as to how does this affect your ability to help entrepreneurs in that area, in the Chicago area?
So Sebastian, I think it actually makes it even more critical when you look at the data that came out of the Latitude conference a week and a half ago out of San Diego. It talks about the Latino community being, the 5th largest GDP, in terms of what they offer. It just heightens the contribution of the Latino community to the economic drivers of our country. So I think it makes it even more important that Latino business, Latinx businesses, they thrive and scale. But I think, touching on a couple of things that have been said earlier, and I'm going to give some examples, there are networks that you can tap into that can give you and help you reach outside of the Midwest. I know Felipe, you were part of this as well, but the Stanford Latino Enterprise Entrepreneur Institute out of the West Coast is a great group that is 900 members deep. And, some of the founders that you get together there kind of can connect you with other VCs in other parts of the country to kind of broaden your network. But in the Midwest alone, there's a lot of also we'll call them incubators and different, we'll call them venture groups that are helping diverse founded groups. There's Endeavor out of Detroit. They have locations all over. They're kind of moving into Chicago as well. And then you've got Chicago's ecosystem is thriving right now, I think, and I think you're starting to see more attention be placed on it. In the last raise that I raised, I was able to kind of tap into Steve Case's Rise of the Rest Fund, and his thesis is to invest outside of Silicon Valley, the rise of the rest, basically all these other areas, Detroit, the Midwest, the Carolinas that are outside of Silicon Valley that need that are thriving, areas of tech and entrepreneurialism that need the support that has traditionally gone solely to Silicon Valley. And I think it's tapping into those types of groups and And, they're in Chicago here, there's M25, there's Carlos's group, Hyde Park Venture Partners. There's Angeles Investors, which is now a national network of it's for us, by us, basically. It's Latino angel investors that invest in early stage companies. So those are groups that, Latino founders should be tapping into.
Thank you, Lou. I am going to turn to Felipe now. Felipe, as part of the registration for this event, we did ask a number of questions. It was optional, but we did ask a number of questions of those in the audience who were joining us today. And we do have a number of aspiring entrepreneurs or active entrepreneurs. As someone who has launched a business and raised capital yourself, what do you wish you had known before you started down this path, and what surprised you the most?
Yeah. So, like, I will say that that sometimes asking for help, it's also a way to build relationships. Yes. I thought, or like before, I used to thought that in order to create a relationship with someone, or to, I don't know, to have a good relationship with someone, you need to like do a favor to them, or I don't know. But one thing that I found that it was very surprising for me is that when you ask for help to other like fellow founders, or to experts, or to, I don't know, capital providers, that's also a way to build a relationship. And I do think that have helped me a lot. So to be vulnerable, or to just ask for help, just raise my hand and ask for help to the people that I know, have helped me a lot. And that's something that it wasn't obvious for me when I started my entrepreneurial career.
Thank you. And I think it's so important to count on that support of others that are in a similar situation. I think one of the things that I've heard during today's discussion is it's a lot of conversations about different support groups. And sometimes for a new entrepreneur, they hear a lot of buzz keywords: accelerators, incubators, angel investors. Maria, I'll start with you. And what advice would you give an entrepreneur who's trying to decide, like, who do I engage with? When do I go to an accelerator, an incubator? When do I go to an angel investor group? What should they be keeping in mind?
Yeah, I mean, I always encourage entrepreneurs, like if you're not in the hubs of, some of these schools that we talked about, or these kind of centrals of capital where you're getting kind of the unheard myths and knowledge that you just get from being in those ecosystems, there's a lot of kind of just learning of how it's done, right? Kind of what's the language in which you approach to ask for capital. How do you build a deck? How do you build a financial model? What's the difference between an angel, a seed, a series A? And the good thing is, I think there's never been as much information online about this that before. I do think that the venture ecosystem has opened up a lot trying to explain this so that founders can come prepared to those conversations, because most venture funds or angel investors will have 1-2 meetings with you max before they don't think it's a fit. Realistically, we say no a lot more than we say yes. So we meet with, I think, 3,000-4,000 founders every year, of which we make maybe 20-30 investments, right? So the percentage is going to be low no matter what, even for those that are investing in diverse founders. So ignoring kind of the funds that we know can be problematic that Lou mentioned, you're meeting with a great fund, the team is diverse, they're on your team. What is going to make you stand out versus all the other founders, entrepreneurs, and companies? And a lot of that is preparation on how you're building your company, preparation on how well you know your customer, preparation on how great of a team you have, that you have the technical skills, the sales skills, everything you need, and then just kind of really good answers to why this fund or this size of a round or this size of valuation makes sense. And so there's definitely a lot of really great resources now online on how to go about that. I'm happy to share them, but I think it is definitely a little bit of the work that the entrepreneur can do on preparation that no matter if we diversify the investor pool, we're not going to close that gap if they don't come prepared.
Thank you, Maria. And Carlos, in the Chicago area, have you seen those support groups to be different? Are you seeing similar like sources of where entrepreneurs are going before they come to you? Do they tend to go to an angel investor group? Are they going to an accelerator, an incubator before they're ready and they're coming to you? What have you seen?
I've seen a mix of both. I think for, and it's funny, I was actually asking a couple of founders about like how they consider what money they take in terms of whether it's dilution or the value that they think the fund can bring to them. And their answer is kind of the answer I would give here in terms of accelerators and angel groups, or any sort of contribution that comes with the trade-off, is you have to educate yourself on the value proposition that they're bringing entirely. So for a group like Techstars, it's a lot of like network and it's a lot of education, and with some investment. And there's a totally different group like Angeles Investors, which has some component of that, but it's a lot more spontaneous than it is structured in terms of like course and such. So it really does, it's a personal decision that the founders have to make on what they view as value to the trade-off equation. In terms of when founders approach myself and when I guide them towards different resources, we'll do anything from pre-seed to A. So we've done half of our companies that we do are pre-revenue. But it's a very different approach that I take when I'm at Hyde Park than I take when I'm at Angeles Investors. And it's largely a function of at Hyde Park, we'll lead a round. We'll put half of the round in, or the majority of the round. And Angeles, in like a lot of different angel groups, you're just following on with the lead. And it's a very different diligence process, and I think threshold for a lot of people. And a lot of angel groups will just underwrite the funds and other investors as opposed to actually underwriting a business, which is kind of like the harsh reality. But yeah, I don't think that to Maria's point, you have to come prepared to whatever conversation you're stepping into. And it can be simply for advice. And it's like the old saying, ask for advice and you get money, and ask for money and you get advice. But I don't think there's any, in my specific opinion, I don't think there's any harm in coming to an investor first and then potentially a accelerator or an angel group.
Great insight. We put together an annual report, which, by the way, has a disclaimer that applies equally to all of my remarks today, which is that I'm speaking for myself, of course, and I'm not speaking for the commission or others at the staff. But in that report, we have a lot of data showing what is happening in this space. One that has been of particular interest to me has been the fact that pre-COVID, the distance between the lead investor and the target business was only 37 miles, which meant that you were pretty close between where the investor was and who was providing the funding, so that if you were not close to sources capital, that made it more challenging for you to get to that capital. I'm wondering if you're seeing any changes in that space, whether people getting more comfortable with Zoom meetings like this has resulted in people being more willing to invest a little farther away, or are you seeing that the capital is still coming from close by because of all the mentorship and the relationship that comes in addition to the capital? It's not just that you're providing the money, but you're providing the support as well, and for that you want to be close. So curious, and to anyone in the panel, Felipe, maybe I'll start with you. and just get a sense, do you see that investors are still coming in from a pretty close geographic area in your case, or do you think investors are more willing to now invest from a little farther away?
Yeah, I do think that definitely after the pandemic, it was easier to like raise from different parts of the world, and from fellow founders, I have seen that it's right now easier to raise even if you are not in the same geographic location. And also we have seen in the case of Latin America specifically that there are now more like funds being raised and more like success stories of other like companies over there, and that have, I think that have helped also the Latino community in the US. Yeah, so it's I do think that now it's not like now it's not mandatory that you need to be like in California or in the Bay Area to raise money. Now it's easier to raise from different parts of the world.
Lou, are you seeing something similar in the Chicago area? Lou, I think you're muted.
Thank you. I think the pandemic broke down a lot of the traditional silos, but it really still comes down to your network. I mean, I'm thinking back to my last raise. I think a lot of it did come from my local network. Yeah, the inclusion of different groups that might be from Silicon Valley or from the East Coast or the West Coast came through contacts of contacts, but I think it's still, you're able to pitch physically, obviously via, Zoom platform and the like, you're able to share materials and the like, but I think ultimately, it's sort of a combination, that you're getting people that are local. And then, I tell everybody, when I'm advising our clients, I tell them, I said, you have to have a strategy at the start of it all. What is your strategy for raising capital? How much are you going to sell? How much of your company do you want to sell off? And then who do you want to go after? Because you have to do a little research on the VCs or the PEs if that's the firms that you're going after, because they kind of have to fit and be contributory to your style and your ethos. You'll know right up front. It's like speed dating. You'll know right up front from the first go that it's not a fit. They don't get you, you don't get them, and there's nothing wrong with that. It's good that you know that right up front, or through your research, you find out they don't invest in your sector. They were a referral from somebody else, and they'll tell you right up front, we don't do SaaS, or we don't do health tech, or we don't do bio, those types of things.
We are fastly approaching the top of the hour, and I do want to get in some of the questions from the audience. So I'm going to go ahead and take some of those. Maria, I'm going to start with you. We got a question from Pamela Lewis, who asked, how can we overcome the myth that there isn't a pipeline of diverse founders to support? How are you identifying and engaging with Latinx and other minority founders? I think this is a fantastic question, because it goes to that myth that the reason we are not funding more minority entrepreneurs is because there aren't any good minority entrepreneurs out there. Otherwise, they would have gotten the funding. So what would you say about this myth?
Yeah, I mean, I think the interesting thing about venture tends to be fairly personal. People think it's a lot more objective than it is, but when it's just you and maybe 2 or 3 founders in a room and you're deciding to bet on them as a team or on them as a vision, it's kind of naive to say that the personal doesn't matter, because you got to see the same vision that they see, or they as a team resonate with you. And obviously what we're seeing is that if you don't have diverse investors who are going to resonate with the same diverse founders, problem set that they're tackling, right? We come from very different backgrounds as Latinos, and we face different, problems that we want to solve for. And if when we, I think the biggest gap tends to be we pitch something around, financial inclusion, and a lot of investors be like, I don't get it, right? Like they just don't. And so they just don't believe in it. And when it comes in early stage venture capital, that matters, right? And so the way I always counter it is just kind of calling them out and saying, don't, you've invested in some really crazy stuff that no one else gets. And it's because you resonated with the founder or with their vision in a weird way that no one else did, because you kind of saw something there. And who is seeing things in the Hispanic or Latinx founders? Because there's not enough of us out there trying to take that big bold bet. So that's one. I mean, obviously, I think it's good for all of us as a community to continue tracking how many students are, studying business, engineering, STEM degrees at universities, and considering going a little bit towards the non-traditional paths, right? Because I don't think we have a pipeline issue per se. I think we have an issue of our community has worked really hard to advance financially and economically. So for you to go into, I don't know, Harvard computer science or a Stanford computer science student who, is the first in their family to go to college, and you tell them, hey, don't take that $300K Google job that you just got offered, but go and, start from scratch and start a company where you're making no money for 5 years. That's a big, steep ask, right? Because we don't have that privilege in our community where, unfortunately, majority of entrepreneurs at the early stages do have family and friends' wealth to rely on to be able to not work or not make money. So there's an enormous amount of privilege that comes with entrepreneurship. And I think that's something that we as a community have to be aware and figure out ways on how do we support those folks, because it's not always easy.
And the questions are piling in. So I'm going to take another one. And Carlos, I'm going to point it to you first, but others feel free to chime in. And I like this question a lot because it goes to this idea of whether you are a fit for the VC model or not. Oralia Alvarez asks, I'm curious to hear from the panel, are Latinas and Latinos building and scaling businesses that fit the VC model? And if so, in what industries are you finding them? Carlos?
Yeah, I mean, my impulsive answer is yes, but if you rephrase the question and ask something like, is there a heavier proportion of Latinos and Latinas building like small and medium businesses or consumer companies, then the answer might be different. But when you think of a venture backable business, the biggest thing that, and this goes part of like the being preparedness, is understanding how a fund works and how we make money. And we make money by investing in companies that have the chance of paying out 10 times or 100 times what we invested. And so that the underlying statement that I'm trying to communicate is it just has to have the possibility of being a giant business. And nowadays, I think venture rounds have become a signal of accomplishment that people chase without needing to chase, that draws them towards venture money, when instead you could fit a better mold in whether it's financing from a bank or a different type of financing. But I disagree with the statement that Latinos are not out there building venture backable businesses as like an absolute statement.
You mentioned preparedness, and we did get a question about a checklist. And Felipe, I'm going to start with you. Lou, I'll give you the last word on this one. And that is, Felipe, if you can think back to that time where you were actually going to pitch for your business, if you were to think about, and this question comes from Alejandro Estrada, if you were to think of that checklist, what are some of those items that we would see in there as you were preparing for that meeting with investors? Felipe, I'll go to you first, and then Lou, I'll go for you for the last word on it.
Yes, well, so first, I would like to make a comment on the venture capital path. not all the businesses are like suitable or a fit for VC. So the first thing that you need to like research or like look for is if your business is like has the growth component and the innovation component to be aligned with venture capital, or if you need to maybe check other like traditional forms of funding. Yes. Now I can give advice on the venture capital part. It's on that end, as Maria mentioned, there like she shared a couple of links. There is also one that I'm going to share with everyone in the chat. So a couple of essays from Paul Graham. There is one that I just shared about fundraising, that it has actually a checklist of what you need to have before you go on a raise, and what you need to take into account in terms of who is going to handle the fundraising from the team, and also like the process and what you need to take into account, and when is the best like time to go and do fundraise. So that could be one important or useful read before you go and raise money.
Thank you, Felipe, for that and for the resource. Lou, you get the final word.
Yeah, no, the Graham link is an excellent link. That's a great starter. You know, as I talked earlier, I would say you have to have that strategy. You know, you got to know upfront if you're going to do equity financing, you got to know how much of your business you're looking to sell off. Oftentimes, when I start talking to people in that seed to early stage, their cap table is already, if they've done debt financing, their cap table is already a hot mess. You know, because they've borrowed and bartered for services, and they've used shares. So that at this point, at the point they decide to go to institutional investors, the cap table is a hot mess. And you have to have that from the get-go. You have to realize how much equity you want to give away, how much you want to sell, and then keep it clean. I think the age-old adage is you want to raise before you need it. That's for sure. A little more challenging in today's market conditions, because I think you have a little more runway time, just because there's still funding for a lot of businesses, but I think especially early stage. But I think you have to do your research a little bit more on your VCs, and you have to be prepared with some of the things that are on the Graham list up front. Have your house in order before you go ask for money. So.
Well, Maria, Carlos, Felipe, Lou, it's truly been a pleasure. There's so much work that still needs to be done to help other Latinos and Latinas to get funding, but seeing the four of you here gives me hope. And I want to thank you for all the work and being an example in this space. So thanks so much for joining us today. Really appreciate it. Muchas gracias.
Thank you for having us.
Thank you.
Thank you. It was an honor.